Safe investing. The word safe can mean so many things to many different people. For example, someone will come into my office and say, I want a portfolio out of safe investments. They mean safe stocks, or what they feel are safe stocks. Perhaps a Canadian bank stock to them is safe versus a technology stock. I can argue the point that Canadian bank stocks, as an example, will fluctuate perhaps just as much as technology stocks at times. So that word safe can mean so many different things. To me, a safe investment means something that is low risk, not medium risk. Something that pays just a straight interest rate. Something that is very hard to lose, but you're not really going to make a whole lot. To me, that is what the word safe means. Yet, people will come into my office and say they want a portfolio out of safe investments. I think the words that should be used are more risk levels, low risk, medium risk, high risk. I find a lot of individual investors don't know what types of returns they need to obtain their investment goals. And so they use words like safe to, I guess, get the idea that they don't want to take a lot of risk, but yet they want to grow their portfolio. As we all know, it's a risk versus return type of approach with any investment. If an investor is looking for returns in the 6 to 10% range with the markets as they are today, we need to be in a moderate or medium risk type of portfolio. When interest rates are 2 to 3% on low risk investments, and you're looking for rates in that 7 to 10 or 6 to 10 range, unfortunately, there is no alternative. We use the acronym TINA, T-I-N-A. There is no alternative to the markets. You can invest in the stock market through mutual funds, through ETFs, exchange traded funds, or just simply by buying individual investments or stocks to obtain that rate of return. But unfortunately, for many conservative or low risk type of investors, you cannot obtain that type of return in low risk investments. So many individuals, such as retirees, people who are no longer working, that would normally look to buying low risk investments to obtain a decent rate of return, and decent is obviously different for everybody, they're being forced to move into, I guess, more riskier asset classes to obtain that 6 to 10% that is championed by so many investors. I think with any investor, the way they should look at their portfolio is figure out where they are today, figure out where they want to be in the future, and it is the job of the investment advisor, myself, to come up with those investments that will get them to reach those investment goals. They could be low risk, they could be medium risk, or perhaps for some, even higher risk investments. But whatever the returns are that individual investor will need to reach their goals, that is my job. My job is to obtain those rates of return so that we can all reach our investment goals. If you like what you heard, please subscribe to my channel and click on the notification bell.